Hi again, Mullen fans. I hope you're doing really well. So obviously it's been, so far at least, a slightly better day with the stock poised to finish by about 1% up on the day, or about 6 or 7 cents with about half an hour in the day's trade to go. There's nothing really driving this. The only main catalyst, I guess you could guess, is that the general markets are up as well. The S&P is up by about 0.5%, and the Nasdaq's up by about 0.25% at the moment. So Mullen Automotive is kind of, I think, just following the general market trends. Plus, we've had a fair bit of selling off, so there's always like a little bit of trickling rebounds. Whether or not we're going to see some further trending up or not is, I don't think likely at this stage. Mullen is in, obviously a dire state. There was not that I always pay that much attention to these articles, but Investor Place did put out a article which kind of spelled out the big problems that Mullen Automotive has. That came out this morning. Obviously we've got the spiraling operating costs as a big one, and while there is positivity in the signs that there is production coming and we're delivering vehicles and starting to have revenue come on the books, it's not keeping pace with the spiraling costs, and there is a very likelihood that there's going to be another big equity raise. And the article does kind of spell out a simple answer to a question a lot of people are having. If Mullen Automotive stock has been so toxic, why do institutions keep trying to, or do they keep funding these convertible share options? And the reason being that when they convert the warrants that they receive, they actually get the shares at a heavy discount. So if you ever look at any of the equity ratings that Mullen does, the pricing of the shares that the institutions are buying through these equity ratings, the conversion rate is actually at quite a steep discount to what the trading price is. And so once those warrants are converted upon, those companies holding the warrants or the newly issued stocks, once they're converted, just flip them on the market, at a profit. Because, basically, if the share's trading at, like, say, $7 and they get the warrant price, the execution price for, like, say, $4, which I wouldn't say as being that unlikely in the case of Mullen, they flip it straight away. Someone on the market, some average schmo like me or you, is going to buy it, and they're going to pocket $3 for that. So it's big money because Mullen Automotive is probably such a lowly graded company. They have to issue warrants at such steep discounts. Well, with convertible share prices at such steep discounts, and it's going to hurt. Look, it's an interesting position that the company's in. Obviously, there's great progress happening operationally, but financially, things look really sour. And at the end of the day, a lot of people here, while we want to see EV manufacturing, we might see that holistically. A lot of people are obviously following the stock because they're hoping to turn a bit of a profit, and at this stage it does not look like a good time to be doing it. So at the moment I would be staying clear of anyone who is sort of suggesting you should be looking to trade the stock, buy in at certain points. It's, I'm not giving advice here, but this is a really risky stock with a very sort of negative outlook. You can see why it's a favorite among shorts. And you know what? If you were someone who wanted to short the stock, I know I wouldn't fault you personally. Some people might, but that's one way you could actually make some money off the stock, it seems. But I've been on a bit of a ride with this stock over the last year or so. They've been covering it, and it's been like disappointment after disappointment, despite these positive headlines that have come out from the company. Like we talked about, the Bollinger being able to receive the full tax credit of the lower of 30% or $40,000, whatever is lower, for their vehicles. Now, the company put that out. It's obviously good news to see that development, but in terms of why it's not something like that didn't make the stock price move, this is an EV company. People would expect that they would get whatever tax credits are available for EVs. So, like, that was a no-brainer, and it was never going to be something that's going to move the market a lot, because it wasn't like out of the blue. The market was kind of expecting that to happen anyway. And so, it can get a bit confusing following Mullen Automotive, because there's a lot of headlines, which is obviously that come out from the company, which are obviously good for investors who want to see what's going on. But, investors hoping that these particular headlines are going to move the stock a lot in a meaningful way. For many of them, if you look at them, they're not really anything that would be unexpected. That's when you get something that's going to hurt the stock, or send it skyrocketing. When it's unexpected good news, we're going to see the stock go up. Unexpected bad news, see it go down. Although in terms of the unexpected bad news that we've seen from the company, there's an edge taken off because people probably are not that surprised when the company puts out something negative. But operationally, the company's been on a bit of a roll. Their problem really lies in how their financials are being handled. Yeah, anyway, just a little bit for Thursday. I hope you're all having a good day. I'll try to keep these videos up, regular, sort of daily market videos on Muln like I was before. I'm trying to get back in the groove. Yeah, anyway, until next time, may the markets trade in your favor. Cheers.